A great, but not quite great enough quarter. That's how the street is really interpreting another quarter of surging sales for Nvidia. Joining us now with his top takeaways from the print, Yahoo Finance's Tech DH, Dan Howley. Dan, got to know what you are making of the overall situation at Nvidia and what you heard.
Yeah, Brad, Sean, I think you guys nailed it. They can only go 200% plus on revenue, and I think it was 400% plus on EPS at one point for so long. I mean, you know, the growth is still huge there. I think it was 94% up year over year for overall revenue. I think maybe 112 for data center, if I recall. So they're still absolutely exploding as far as the growth goes. There's no doubt that the growth is on a incredible upward trajectory still. It's just not the insane stuff that we had seen at the very, I guess, takeoff of the generative AI revolution, if you want to call it that, or the big kind of, you know, blow up with generative AI. But I think the main takeaway here for me is that Blackwell seems to be in perfect shape as far as Jensen Huang and CFO Colette Kress say. They say that Blackwell's in full production in the hands of all of their major partners. They shipped 13,000 sample Blackwell chips in the quarter, and we had them say that the Nvidia is on track to exceed previous Blackwell revenue estimates. So Blackwell clearly doing very well. Jensen Huang saying that it's in great shape, that they continue to be on pace to execute on their annual roadmap. That's as they go from Blackwell to the next chips, and that their Blackwell production is full steam, and they will deliver more, as I said, this quarter than they previously estimated. So Blackwell seemingly doing great. The kind of concerns over overheating, the issues with the mask procedure are kind of in the rear view, and they're just kind of plowing forward. The overall revenue numbers were obviously very, very good. They came in at 35.1 billion versus 33.2 billion in expectations. The anticipated revenue for the current quarter now, Q4, is 37.5 billion plus or minus 2%. Wall Street had that pegged at 37 billion. So it just looks like Wall Street's getting more on track with what the expectations are for the coming quarter. And, you know, we saw that dip, as you guys pointed out, just as they had announced, and then in the post-market action, the shares fell, perhaps because the expectations weren't up to snuff for the sky-high expectations that have been set in the prior quarters. But, you know, we're looking now, it's just about below 2% up this morning. So clearly there's been a turnaround. Brad, you pointed out some of the analysts that are saying, you know, this is a great quarter. Sorry, it's not 200%, but it's still really good.
All right, Dan Howley, thanks so much for breaking that down for us.